Formalities are out of the way. Let's start talking about support and resistance. Now, in tonight's class, I have put together a couple pre-prepared presentations for you. If you'd like to see these little short presentations separately at a later time or after class, you can go to YouTube and look for the YouTube channel called Trading Education. When you've located that channel, then just look for the playlist for support and resistance. Now, I've made it easy for you. On your screen, you'll see some download buttons and some handouts. I've put together these handouts for you tonight. The first one is an incredibly great resource and reference guide on technical analysis from investing.com. I've also put together a special little handout that covers support and resistance so that you have something to research or you refer to after this class is over. You'll also see on your screen a little Word document called Presentation YouTube Link. If you just download that, it's got the link right there for you to go watch these little pre-prepared videos. And then lastly, tonight in class, I'm going to share with you a very short little PowerPoint in a video format on a support and resistance trading strategy. I've also downloaded or uploaded the video, which you can download right now. It's a very short little one, and everything's explained to you step by step in a very nice strategy for using support and resistance trading. So they're on your screen right now under handouts. Just click the download button and download them to whatever device you're using, because you cannot get these in the recorded class. They're only available in tonight's live class. Now, into the class tonight, I'm going to use the term security. But I might say Google, I might say the euro, I might say the Japanese yen. I'm just doing that to break up the monotony, because the concepts we're talking about tonight work for all assets that are traded in the public markets that have an open market. So whether you're looking at Bitcoin, whether you're looking at Facebook, whether you're talking about Google, whether you're talking about the euro, you're talking about any digital asset, you're talking about an index, you're talking about the FTSE, you're talking about gold, you're talking about oil. All of these same concepts work exactly the same with all of them. Now, also, I intermix the terms investing and trading. Now, I would say most of the people sitting in my audience tonight are traders. Okay, and we're sponsored by Alvexo, who's a CFD provider. This is all trading. What's the difference? Well, trading takes place in a short-term environment, and most trading, whether you're trading CFDs or you're trading in futures, you're never actually taking delivery of any asset. You're not getting the shares of stock sent to you. You're not getting oil dropped off, in your front yard. You're not having oil tankers. You're not getting gold in a safe deposit box. You're trading because you're buying and selling or closing your trades before the physical delivery ever takes place. Whereas an investor and you're buying Google, you want those shares issued in your name. If you're buying gold ingots, you want them in your safe deposit box. Now, oil and commodities are a little bit different because you would be buying those over a longer period of time to negotiate their contracts. Towards the end of those contracts, you'd own the contracts. Because remember, in CFD and Forex trading, you actually own nothing, because you're simply trading a buy price against a sell price. So a lot of people ask me all the time, should I buy today? Should I sell today? What will the prices be later today or tomorrow or next week? Well, the fact is, I don't have a crystal ball or a Ouija board. And anybody out there who tells you they can tell you where the price will be in an hour from now or tomorrow or next week, they're full of bunk. So if you're attending a class in the hopes that technical analysis and using support and resistance, which is part of technical analysis, has the answer to these questions, I'm afraid I have to disappoint you early. It doesn't. However, if you're attending this webinar with the hopes that technical analysis will improve your trading and investing, that it surely will. Now, the concept of technical analysis, okay, I can explain to you tonight as an elevator in a building. We have low-rise buildings, we have high-rise buildings, we have mega skyscrapers, but they all have elevators going up and down. And the idea of support and resistance are the floors above your feet and the ceilings above your head if the asset's going up, or if the elevator's going up, or it's the floors below your feet and the ceiling above your head if the asset's going down. Now, as the asset is moving up, that floor is your support level. It's stopping you from falling through all the way down to that basement and getting killed. But as you move up, that ceiling is what's your resistance. You need to break through that ceiling to get to the next floor. And guess what? When you go through that ceiling, it becomes the floor under your feet and becomes your what? Your support level. When the elevator reverses and starts going down, you now have to break through the floor to get to the next floor down. So the floor becomes your what? Your resistance, because you got to break through it. It's no longer supporting you and holding up because you want to go down. So you need to break through it so it becomes your resistance. So you have the same levels of support and resistance going up, and then they're just reversed when the elevator's coming down. So I don't even interchange the terms. I just have support and resistance. Now, the concept is most widely used in Forex trading. Strangely enough, everyone seems to have their own idea on how you should measure support and resistance. And it's not that just everybody has an idea. We have lots of different support and resistance. We can get these levels at using different means. And they're all just as good. In fact, using several different formulas or different approaches to support and resistance can help you build yourself a very secure support and a resistance level or zone. Now, the concept of support and resistance forms the basis of most technical analysis. Forex traders look to buy at areas of significant levels of potential support in an uptrend, whereas Forex traders look to sell at an area of significant level of potential resistance in a downtrend. Now, we can think of these support and resistance levels as levels or prices where in the past the asset had a significant time going above or below. Now, it doesn't mean yesterday when it was at this price or last week. It could be that we're all watching Bitcoin as it goes over 10,000 to 11,000, back down to 7,000, up to 9,000. Well, we could realize that every time it's moving up from 8,000, it can get up to 84, but it has a very difficult time getting to 84.50. Now, not this week, it went straight up, but last month it had a problem. 6 months ago it had a problem, 2 years ago it had a problem. So we know we have a level at 84.50 that might pose as a significant resistance level as that price is breaking up. Just because it went through it with no problem last week doesn't mean it's going to go through it today. We're looking at historically how traders acted and reacted at certain prices. So you may have heard the old business cliche, buy low and sell high. Traders usually ask the question, how low is low and how high is high? One way we can quantify these levels is using areas where prices stopped and changed direction. The areas where price stops after moving up and then turns around is called resistance. Resistance acts as a ceiling, capping the further advance of the price. Resistance is not just some random area where price turns around. There are potential sellers, traders who have sold an asset once before and remember the collective power they had to push the price lower. There are also buyers that went long at a support level and were disappointed that that price did not go higher. And this makes up the history of that asset, so to speak. Because if you understand the concept of price action and understand price action is simply the overall psychological makeup or the feelings of buyers and sellers. That's all it is. It's price moves in random movements, and it's the psychological makeup. If a buyer thinks the price is going to go up, he'll buy. If a seller thinks the price can go down, he's going to sell. So today might be a gloomy day outside, so he's in a sell mood. Okay. It simply is the psychological makeup of the price. And all of these people out there are looking for ways to see if price is going to push up or push down. So when we get to these psychological levels of resistance and support, we can judge how the market's going to react or where they reacted before. So another group that make up this resistance level are ones that bought at or near resistance and are trapped when price fell at resistance. These traders are begging for price to come up just so they can get out of their trade. Now, in the old days, before we really had online trading and we were trading CFDs, there was a balance between supply and demand. And this is the level at which supply or demand, you had more supply and less demand. But as you see, when price is moving, price is stepping up in an uptrend. And we're talking about not today because you're only here today. This is historically back. But what we're doing is a level of support can be projected forward way into the future because that level of support is only important to you when the asset is trading around that level. So right now, we see this asset is trading all the way up here. So this price, this old support zone, isn't important to us except when the asset starts coming down near this level. So this level would be important to us, this resistance level, this previous level. Now, there are many different ways for us to get support and resistance levels or support and resistance lines. And this is why it confuses traders a lot. We can get these from pivot point charts. We can get these from my favorite, which is called eyeballing. I go back and look at historical charts and try to see where an asset has been and what price it's had a difficult time at the past. So here is popping up a chart on your screen for you. Here we're looking at the Euro-Japanese yen live chart. Now these support and resistance lines I brought forward from way back when, because your support and resistance lines hold forever. Now, they're more valuable when they're more recent or they've been tested recently. But the Euro-Japanese yen, when it was trading at 122.70 or 122, 121.90, a year ago, 2 years ago, 3 years ago, the levels that it had to say, had a problem bouncing through are just as important today. You just project them forward. So as we put these on our charts and projecting them forward, look at how well these are holding now. Look at how well, as the asset was moving up, it couldn't reach this resistance level, fell back down. Look at all the congestion right on the support level, bounced back off, and now it's moving right back up to that resistance level. And there's a good chance that it's going to touch that resistance level and fall back to support. But there's also a good chance it'll break right through. There's no law that says an asset can't break right through resistance or support. But we had expected, what we would expect is if the market, unless something's really affected the market, that the asset would move up. I'm sorry, let me get my markers on here. Up to the resistance line, and then the buyers and sellers would make up their mind, and then we'd see it push right through. We'd get a little bit of congestion. Doesn't mean it can't get up to this far and then just bounce through. But most of the time, it will have some reaction at or near that level. We also can have our lower support level. This is where price, when it was in the downtrend, came down, bounced off, came down. And look, this level was brought forward from months ago, but look how important this level held as the asset was in its downtrend. That is where the downtrend ended, okay? When it came to the support level and couldn't reach it and was rejected, and the low reached there and bounced off, and then we moved back into an uptrend. The buyers jumped in the market buying at that level. So again, here we have the euro US dollar, and historically I went back on the chart and looked and brought forward a level, a price where I saw assets having a difficult time. When I put this line on the charts, look at how well this blue line, okay, has been supported. Okay, price fell below, came back up to its tongue on it, came back down. Price here, look at all the opens and closes we have. But this was historically supported. But then look what happened here in our trading today. Price came up to that previous old support level, old resistance level, touched it, okay, bounced off, again, opened at that level and fell right off that level and came right back down. Here's our other support line. Now we can have lots and lots of support and resistance lines. We can also have major and minors. Minors are, you saw some congestion last month, 2 months ago, 4 months ago when the asset was at this price, but it doesn't go back much farther than that. It can be a minor support or resistance. We can have many of these levels. There's no rule about how many you can have or can't have. They can be achieved in different ways. So let me share a little presentation that'll show you the different ways that we can get support and resistance levels. You get them off of trend lines, pivot point chart. You can get them off Fibonacci levels. You get them off a Gann fans. I mean, this is why it gets confusing. But again, we're going to look at eyeballing, which is the most important way, because eyeballing requires you to go back like I just did here in the charts and find these levels. Okay, and that means you're interacting with the chart. You're not using some indicator or some calculation. And that makes you more aware of the levels, but it also makes you work with price action. So let me share with you. Now, I'm going to share with you a little presentation on eyeballing. Okay, now it gets a little boring. I tried to advance it as fast as I can. It does get a little boring because you have to learn the details of how to do eyeballing. But it's not complex. But it's very important that you understand how to do this on your charts.
So let's start with what support and resistance is. I think when a lot of traders think of support and resistance, they think of pinpoint lines on a chart that try to predict where the price will turn on a dime. But it's more complex than that. Let's start with the basics. Support and resistance refers to the technical analysis of price areas where the price action will potentially pause and change direction in any given market. If there is a price area below the current price action that has the potential to stop the price falling further and change its direction, we call this support. If there is a price area above the current price action that has the potential to stop the price rising further and change its direction, we call this resistance. Price can and does break through these price areas all the time. Typically, when price breaks through a particular price area that has been identified as either support or resistance, it will become the opposite to what it was before. So if price is rising and it breaks through an area of resistance, that resistance area now becomes a support area for the price. And the same is true in reverse. If a price is falling and it breaks through an area of support, that support now becomes a resistance area for price. There are different types of support and resistance levels, and I like to split them up into two categories: static support and resistance and dynamic support and resistance. Static, as the name suggests, are support and resistance areas that don't move. They are identified by the specific price level that the historical price action has shown them to be at. This is the main type of support and resistance people know and refer to when they talk about it. Dynamic support and resistance is the opposite. It refers to support and resistance levels that move. They are not at a fixed price. I use two types of dynamic support and resistance areas as part of my trading strategy, which are daily pivots and moving averages, and these levels change regularly. Daily pivot levels are specific levels of support and resistance that change on a daily basis. So I will have a set of daily pivot levels plotted on my chart on the Monday, and then these levels will change on the Tuesday. Monday's pivot levels are now no longer of interest to me on Tuesday, as all the levels have changed. Moving average levels are dynamic as well, as they are constantly changing with the formation of every candlestick. Dynamic support and resistance levels, such as daily pivots and moving averages, usually plot themselves through indicators within a charting platform. So if you add the daily pivots and the moving averages to your chart, the levels will update as soon as they need to. Static support and resistance areas usually have to be identified and plotted manually. So let's look at how we do this. We can identify these price areas by looking at the historical price action on our charts. We are looking for price areas where the price has been heading in a particular direction and then has stopped and reversed in the other direction. Equally, we can spot an area of support or resistance if the price has been heading in a particular direction and has paused for a significant amount of time before breaking through the area and continuing in its original direction. Sadly, support and resistance areas aren't as clean in reality as demonstrated by these illustrations. So let's jump over to the charts and look for some real life examples. Okay, so here we have the daily chart of the FTSE 100, and as you can see, currently the price is up at the 7,300 level and has spent the last couple of months around the 7,000 level. Now, to demonstrate how to identify and plot support and resistance areas, I'm going to scroll back on the chart to the last time the price was in the same region as it is now. This way we can use the support and resistance areas we plot from the previous price action to see if they have any significant impact on this price action that's happened over the last few months. So I'm going to draw two red lines, one above this price action and one below, very quickly. There we are. Now we want to scroll back and find the last time that the price was between these two lines so we can use it to identify and plot the support and resistance areas for this price region. So if we scroll back, we find that the last time price was in this particular region was sort of December, January to August 2016. So in order to start plotting the support and resistance areas, we first need to identify where they are. And as I said in the video previously, we need to spot the points where price has had a significant reaction. And to do this, we want to find where price has either been heading in a particular direction, has stopped and reversed, like here, or where it has stalled for a significant amount of time before either breaking through a particular area or reversing. So this area here, for example. And to plot these areas, I'm going to take my circle tool and I'm just going to first pick out all the reactions that I can see on this particular region of price action. So as I said before, I'm just picking out all the reactions where price has either reversed or stalled, and I'm just highlighting them so I can see them more easily. Fantastic. Okay, and now to plot the areas, I'm going to take my line tool and I'm going to work my way down the chart until I come to a reaction point. So the first reaction point I come to is this one here. And I want to encapsulate this reaction with the two lines. So I want to take the highest point the reaction occurs, and I want to try and place my line at the lowest point where the reaction occurs. And then once I've done that, I can delete my circle. So here we have our first support and resistance area. And then all we're going to do is work our way down the chart, picking out these reaction points, their lowest and highest levels. Another one here. Another one here. This one has more than just a one reaction from it, which is fantastic as it gives this particular area a little bit more weight in future use. As we come down a bit further, we've got this one here. So there. Actually, this one could probably come a little bit lower and encapsulate that reaction as well. And then we've got one down here to there. Got another one here to there. And then we've got another one here to there. And then we've actually got another one here to there. And then we can delete our circles, as all of these reactions should now have been encapsulated in the areas that we've drawn. So that one has, yep, yes, 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 and yes. Now you may have spotted that there is a particular area here that doesn't have any support or resistance area within it. And it does look quite a large area to not have any sort of area in there at all. And all that will have happened is the particular price action that we're looking at here will not demonstrate where this particular area is. So if we scroll back further, here we are, we can see that the price does react within this particular area, but just not in the price action that we were looking at. So we can use this price action here to identify this support and resistance area. It's fantastic. We now have all our areas plotted. And to make these a little bit more visible for us, I'm going to colour them in with this rectangle tool. So I will speed this part up as it's quite boring to watch. Okay, all done, and as you can see from the daily time frame, the price action has reacted in the support and resistance areas we have picked out from 6 months previous, but if we drop down to a lower time frame, we'll be able to see these reactions a bit more clearly. So let's drop down to an hourly time frame, and let's work our way backwards from the most current price action. And as you can see, price has respected the support and resistance areas we picked out from 6 months ago rather consistently. We are seeing price move into these areas and then either reverse or stall all the time. We can see as price breaks through a particular support and resistance area, like here for example, it does then revisit it and use it as support. So initially this area was resistance as price moved up into it. It broke through, revisited, used the area of support and moved up. This analysis also reinforces that support and resistance is best identified in price areas rather than pinpoint levels. You can see sometimes price will revisit a particular area, looking at this one here, on multiple occasions, and each time it will get a reaction from the area. So we've moved down, bounced up, moved down, bounced up, moved down, bounced up. But the reactions haven't come in at the exact same pinpoint level, but they have come in within this area that we identified from the daily time frame. And this happens throughout. The reactions we get through these areas, as I said earlier, are pretty consistent. But there are a few general rules of thumb that I use with support and resistance that I want to make you aware of. The first one is that support and resistance areas can be identified on any time frame. You may have spotted some further areas on this hourly chart that we haven't identified from the daily price action between January and August 2016. And as you zoom in on any price action by dropping to a lower time frame, you will always find more areas of support and resistance. But the areas identified on the higher time frames will always be more powerful. And what I mean by that is, a support or resistance area identified on a daily chart, for example, will more than likely have a bigger impact on the price and will be a valid support and resistance area for a longer period of time than a support and resistance area identified on a 15-minute time frame. And the second one is that support and resistance areas don't last or stay the same forever. As price moves back through a particular price region that it has visited before, you may spot that the price is no longer having reactions at a particular support and resistance area that you've anticipated.
You may have noticed that this was a very manually intensive process. But on the other hand, to put all those levels on our charts only took about 4 minutes. Okay. And once you have them on your chart, most likely price doesn't move in that big of a zone or that erratically, that they'll stay. You'll have to do them maybe tomorrow, the next week. You want to keep defining them, but once you have them on your chart, and they also will be able to go forward as price moves, because they'll be valid whenever price moves back into that price range. But unless something really happens with an asset, prices will stay for a pretty long time within that range. Or because we know prices move up and then come back down, it may break through and go way out of the range you had today, and you have to do that again. But then it's just going to come back down to that price again, and you'll have those ranges on there. And it's very, very important, like we showed you or mentioned, that you use multiple time frames. So what you would do is you would start out using, especially for our type of trading, you'd start by using your daily charts. Okay. Those establish prices. Because remember, you're only looking for a price level where price hemmed and hawed. Okay, so if price on the euro got stuck at 113.73, doesn't matter whether you're looking at a 1-hour chart, a 5-minute chart, an hour chart, or a monthly chart. 113.73 was an important level. It's going to stay. But after you've defined your longer term price levels, and they become your major support levels, then you can reduce your time frames. So like here we have, these are very good on how they're holding true in our 1/2 hour time frame. But because we're trading and we're looking for something critical to help us open a trade, we may then want to come back down to 15-minute charts and locate maybe more finite levels on that 15-minute chart and draw them in. So we can see here how important, look at how important this price level is right there. Okay. If we bring it back to the past, it was important here, 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 and here. So that's going to help us in that range. Now we have price stuck right here. Is this a support? Look at this. Here, price got stuck at the same place yesterday, trying to move up above it. Okay. Was it a significant importance down here? When price was above it, it came here, it came down to it, bounced off, moved back up, bounced up. It took a big red candle, but as soon as it bounced through, it came right back above it. So this level is a critical support level also. Okay. So what we would be looking for at this point is to see if the euro bounced off that level and will return to its previous move. Now, as we mentioned, there are other ways to get support and resistance levels. One of those comes from what's called pivot points. Pivot points are available from any website that offers technical analysis and technical analysis summaries, or you can use what's called a pivot point calculator. Pivot points are strictly numeric calculations based on the open, the high, the low, and the close. Okay. The first thing with pivot points is you need to make sure you have your technical analysis set up to the right time frame that matches the time frame in which you are putting them on your charts. So we can see, so I just clicked on the 15-minute, the 30-minute time frame, and this would be the price, and we're looking at the euro US dollar, and this is the price 3 levels below and 3 levels above for resistance and support. So we can then take these numbers and plot these on our charts. Now these numbers are continually changing because they're based on where the asset is currently trading. So, but we could take this 113.64 and this 113.67 and plot those. I'm just taking the resistance one and support one and plot those right on our charts. So we have 113.61 and 113.67. Actually, 113.61 and 113.64. And plot those right on our charts to give us some more important pieces of information. And we could go, remember, they're like the elevator. This is the 3 floors below, the 3 floors above, and we can plot these directly on our charts. But we have to make sure we're using the most recent calculations. So that's another way that we get pivot points. We can have dailies, weeklies, monthlies, hourlies, but because these are constantly, because a pivot point calculator is simply using, let's see, I think we have one right here on investing.com. So it's simply using the current high, the current low. I'm just making up these numbers as I'm talking to you. The close of this time frame, and the open of this time frame, and then we hit the calculate, and it's going to calculate. Now we're only concerned with the classic because the others are based on, these are technical analysis tools you'd have to use and trading systems, and this is Woody's, Camarilla, and DeMark's. We're using, so this just gave us resistance 3, resistance 2, resistance 1, as well as 1, 2, 3, and 4 support based on the current bar or candlestick that we just plotted onto our charts. But this is a mathematical calculation. So it's not like eyeballing. We've actually gone back and researched these. Now remember, they're not precise, whether you're looking at support and resistance from eyeballing, where you're using a trend line. These are not finite numbers because they're zones or alerts. And the nice thing about combining these together, I'll use several different ways to get my support and resistance, and I'll say this is my support zone, and it may be 3 pips, 4 pips, 5 pips wide based on the different ways that I achieved my goal to get these. But I'm not looking for, hold on a second, So arguably the easiest support and resistance level to add to your charts are pivot points and our built-in indicators. Now, a lot of charts, especially the charts in Alvexo, you can just click up on your indicator bar and tell it to drop the support and resistance levels on there because it'll drop them on based on pivot point calculators. Because and you don't even have to draw them on. So remember, the market ebbs and flows. They go up, they come down, and they move sideways. The primary way we can make sense of these movements are by analyzing the price action as well as levels in the market where price bounced higher or rotated lower. So I'm going to share with you a little presentation that's a great trading strategy. Now, I've also given it to you as a video download. And there's no voice on it. Just watch. Everything's written on the charts, and you can follow along through. And just watch the bottom of the charts, and you'll see the step 1, 2, 3, 4, 5 go across your screen. Now, like I said, I've also given it to you. It's in your handout in the support and resistance indicators, as well as the video download, so you can watch this again at home at your It's a very simple strategy to trade from support and resistance lines. Another one's called the bounce and the break. It's a very simplistic way, but if you think about your trading, trading is more about setting your entry point, your stop loss, your take profit point, and handling your risk management. All you're looking for is some type of an alert that's going to give you a buy or sell possibility, and then applying filters. Some of the filters should always be support and resistance. If the asset's approaching a resistance line and somebody's telling you to buy, you want to make sure that you're wanting to see how it's reacting to that resistance zone. You want to see how it's been bouncing up and down between those, where it's held, where it hasn't. And so what you're doing is filtering out these possible signals you're getting or these buy and trade sell opportunities, and support and resistance will help you, and they'll also help you set where you'd want to put your entry point and your exit point, because you wouldn't want to buy if you're going to buy long as price comes near a resistance zone. You want to see that it's going to break through with some momentum. So you don't want to buy the hem and the haw. You want to buy. So if you got a buying opportunity, you want to wait till it goes through that. If you combine that with volume and see that when it pushes through, the supporters are buying, the volume's increasing, you have a good system that you filtered out the possibilities. Now, the bounce, as the name suggests, is one method of trading support and resistance levels, is right after the bounce. Many Forex traders make the error of setting their orders directly on support or resistance levels and just waiting for their trade to materialize. Sure, this may work at times, but this kind of trading method assumes that a support or resistance level will hold without price actually getting there yet. You might be thinking, why don't I just set entry orders right on the line? Well, that way, I assume that I'm assured of the best possible price. When playing the bounce, we want to tilt the odds in our favors. And so some sort of confirmation tool will be needed. So what we would want to do is we want to wait for price to come down to the support level and then bounce off. But we actually have to wait till the bounce has occurred. Okay. After we confirm that that bounce has occurred, we would then place our entry, and we would place our stop loss a few pips below that support line. Okay. So if you've been looking to go short, you would wait for the bounce off of resistance before entering. By doing this, you avoid those moments where price moves fast and breaks through support or resistance levels from experiencing catching a falling knife. You're trading Forex, you can get very bloody. In the perfect world, support and resistance levels would hold forever, but also McDonald's would be healthy and we'd all be flying around with jetpacks. In the perfect Forex trading world, we could just jump in and out whenever a price hits those major support and resistance levels and earn loads of money. But the fact of the matter is, these levels break and they're broken quite often. So it's not just enough to play the bounces. You should also know what to do whenever support and resistance levels give way. Now, there are two ways to play breaks in trading, the aggressive way and the conservative way. The aggressive way is the simplest way is to play breakouts is to buy or sell whatever price passes convincingly through a support or resistance zone. Now, if you've ever come to our classes on like chart analysis or chart patterns, these usually occur like at the apex of a triangle. Prices are moving into this triangle and getting forced into the apex, and they've got to break out at some point. What we want to do is look out and see if they broke up to support or down to resistance, and were they able to bounce or break through that support or resistance with momentum. And we can combine this with the momentum indicator and volume, and then we can then make sense of what the market is doing at that moment. So there are many ways that we can combine or use support and resistance to confirm what other indicators and chart analysis is telling us. We've gone over major types of support and resistance and how to use them as indications of market conditions, levels to look to buy or sell from, levels to define risk, and as a framework to understand what the market has done, what it is doing, and what it might do next. And that's the one great thing about support and resistance levels, especially eyeballing. You're using what the market has actually done in the past, what is it doing right now, and where it might be going in the future. So when you combine a solid understanding of support and resistance levels with price action and market trends, you have the perfect triumvirate for trading. Support and resistance doesn't have to be confusing. We can mix and match any of the methods and create a healthy amount of price levels that we can trade. As always, practice makes perfect. So make sure you test out these methods using the real-time demo account on the Alvexo platform. So thank you very much for joining us tonight. Again, if you'd like to learn more about support and resistance, go to the Trading Academy at Alvexo, www.alvexo.com. And please make sure you download those free handouts I gave you. There's no registration, there's nothing to fill in. Just download the files, you can open them and use them as your resource material. You'll find that the technical analysis guide from analysis ebook from investing.com is a great resource material. You'll find that the support and resistance indicator handout I gave you will go through everything we talked about tonight, give you charts and examples and everything else. And then I gave you that little strategy I played in the little PowerPoint. I gave it to you as that video that you can watch at your convenience and figure out step by step how to trade support and resistance. So thank you very much for joining us tonight. Thank you for supporting Alvexo, and thank you for being part of the investing.com family. Good night now.